What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 14th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about the continued bloodbath in cryptocurrency markets, as over the last 7 days, we have many cryptocurrencies down 30, 40, even 50 to 60%. Leading by names like Solana that have completely tanked during this period of time. Now, I want to go ahead and talk about a lot of things in today's video, as we've been continuously bearish here over the last couple months since we took advantage of the relief rally in the summer. I want to spend some time to break down where we see Bitcoin's price going, the continued contagion following the collapse of both Celsius and FTX, and on top of that, how bad things can really start to get, considering the macro environment and considering the internal microenvironment of crypto. We've got a lot of things to dive into. If you enjoyed the video, drop a like, and let's go ahead and kick things off. So first off, let's go ahead and talk a little bit about price here before we dive into FTX and the contagion and all those elements that will start to play into our price thesis. We can see over the last week, Bitcoin, after getting a rebound on Thursday, has continued to bleed here throughout the weekend. Whereas equity markets are starting to show some signs that they're trying to fight and look optimistic with the recent inflation report that came out back during last week. The markets, on the other hand, in crypto are continuing to move lower off of growing fears of continued contagion. Now, for those who may not know what contagion means, think about it in the same way you would think of the word contagion with or contagious with a virus, something being viral and spreading. Essentially speaking, this is describing the fact that if FTX has gone bust, if FTX was way over leveraged and left themselves in a position where they have more liabilities for deposits for the users who put funds on their app than the actual assets they have remaining, that is likely going to mean that other players in the space who are either bigger or smaller are likely affected by the same situation. Either they were exposed to FTX, or more likely than not, they were using the same risky practices that FTX was using with customer funds to generate additional yield. It's as simple as that, and that risk of contagion is real. It happens in traditional financial markets, and it also happens in something highly speculative, and as we've seen now, an industry that has been mainly run by a lot of people who don't have any proper risk management strategies. It is much more likely to happen in this space than anything else. We've seen the equivalent of what is our 2008 moment for crypto. But on top of that, being a technology-focused sector, I think it's somewhere in between our 2008 and dot-com bubble phase. And this is likely going to justify Bitcoin moving much lower. Now, I understand a lot of people out there with Bitcoin well below the 200-week moving average, with Bitcoin down, a whopping, I think it's around 77% here from top to bottom. A lot of people are thinking, Nick, isn't it time to buy the dip here? What's the difference going to be? A couple percentage points here for Bitcoin. I don't care if I get it at 80% or 85%. Can't be that much of a difference, right? Well, if you just take the time to print the chart, and I'm only saying this, guys, I'm not saying that you aren't aware of this. I know you guys have watched the channel. Many of you have watched it religiously here, and you know I brought up this point. But for those of you who might have missed it, again, a difference of a 85% decline, much more in line with the traditional bear markets we have, versus a 77% decline cannot be understated. Right now, a 77% decline from top to bottom takes us around the 16K mark. If we drop down to 85%, that is going to take us roughly towards around $10,000. You could be paying a 50% premium on top of Bitcoin. Big difference. Big difference. And many people don't understand this concept of how as you decline from top to bottom measurement on percentage gains, you are really putting yourself at a lot of risk for a potential decline here. 34% decline from here on out, or another way to look at it is a 50% premium. All right? So we got to make sure that we take it slow, we keep conservative, and we understand that it's not about picking an absolute bottom. It's about knowing when the trend is ready to start reversing. It's not about picking absolute bottoms. It's not about timing the market. It's about being consistent with your capital, protecting your capital during these times, and waiting for when the market gives you the right signals. Because I can promise you all, right, that's the same mentality that trapped a lot of people when we started getting the dip here every single dip we had back during 2017 and 2018 and going into the tailwind here that really knocked Bitcoin down an entire 50% from that point on. Many people thought it couldn't break. We were one of the many people who were hoping for that level, and to be honest, it got smashed right through. We were very accurate on calling the top in 2017, but to be honest, we were too quick to call the bottom. And I'll be happy to say that here. Many content creators don't want to talk about their flaws. We learn from our mistakes here because we want to do better. And I got to tell you guys, not just looking at price and all the news has gotten me concerned and realistically worried that we've got more pain to come. But take a look at the cumulative volume delta on Bookmap. You guys know on the Macro Mondays here, we like to track market order flow, the bid and ask resistance. This number has got to be the worst I have ever seen market order flow in crypto. It is real capitulation. And I know a lot of people were really excited after that CPI report, thought, oh my God, this is going to be the room for the Fed to pivot. But I got to be honest with you all, whether it is or isn't, as we're going to talk about later, and I got to be honest with you all, I don't see the Fed pivoting anytime soon, at least if they're serious about cooling inflation. Put aside what inflation does, the market is telling us right now, through the market order flow, that it is still worried that there is much more capitulation to come, that the scar that is going to be left on this industry, and I got to tell you guys, I'm not eager to say this. It pains me to say this. I've been covering crypto here on this channel for 5 years. The damage that Celsius, Voyager, FTX, and potentially some other companies, which we're going to talk about here in just a couple moments, have put this industry in, it is going to have ramifications similar to the peak euphoria of the dot-com bubble and the same type of damage that major financial institutions that had gone bust during 2008 put on the financial sector, the trust in that system. And we've got to see that this is going to continue here. While there is definitely some eager bid support here, right? This is the typical order book here of market makers just tracking the market down, right? We're not seeing any clear major buy levels. If we simply zoom out, a lot of those bids, right, that many people would be expecting for, they're not showing up here on the Binance futures. If we take a look here at multi-book as well, right, zoom out, try to get a good picture here of what the market order flow is looking like, abysmal, minus 26,000. Now on that order book, we've got a little bit of bid support here around some big even levels, like 15K. As we scroll down again with those even levels, 13, 14K, they're psychological levels that are going to get interesting. And that's where institutions are going to start digging up positions. They're going to start digging things up when we get towards that $10,000 range. And again, we've been beating like a drum here in this point about 14K. And I gotta be honest here, as you all see, I'll admit when I get things wrong, right? We've definitely gotten some things wrong in the past. But I gotta say here, I really don't like how people say, oh, but Nick, you didn't predict FTX was gonna go bust. This was a black swan event. No, it isn't. It's not a black swan event. A black swan event is when everything's going normal, everything's within trend, and then out of nowhere, something completely unpredictable happens. Well, to be honest, we didn't have our eyes on FTX. Be honest in admitting that. We considered a big part of why I've considered the idea that price could potentially go down is because of further contagion. This is a very common phenomenon in markets. And the reality that a lot of people haven't considered yet when we talk about FTX as an exchange, right? For multiple months, FTT token traded up here at 23, 24 bucks, and now it's down to new lows. People who told you to buy the dip on that are ultimately wrecked, and they've wrecked the individuals who they told to go out there and buy it. The point here I want to make is that FTX was in the hole way back here. Now, of course, the market started to reprice that in, right? A risk of that, as you can see, the FTT token lost about 50% of its value during that decline back between April, May, and June when Celsius was going under and the concerns around Luna were real. But during that whole period of time, Sam and the team at FTX were just saving face. They were already in the hole. And they were able to keep quiet on it enough until there was too much withdrawals, and they couldn't satisfy those withdrawals. So they had to pause it. And this is a very concerning thing because we've got many other platforms showing red flags. You've got BlockFi pausing withdrawals due to the risks around what's going on with FTX. Sounds like Contagion and insolvency issues to me, considering they were already hoping that FTX would acquire them or save them. We've got the risks as well from the developments coming out from crypto.com. This is something that, again, I want to emphasize: the more speculative, high advertising, risky plays that are, again, out there doing very shady stuff. I've known Chris here. I've met him before. Again, I met Sam. I met many of these people before. And while I don't want to speak bad about them, I do want to make it very clear that if they did anything when it comes to over leveraging themselves or essentially utilizing customer funds to go out there and get speculative yields, again, it's important to note that all these companies, put aside what I know about them personally, you need to understand that there is a risk. And the simple point should be that as the storm is brewing right now, if these exchanges literally followed good practice and serviced as an exchange, there shouldn't be any liquidity crunch. People should be able to withdraw, and they should show 6 months, a year later, hey, look, guys, if you're looking to still buy or trade crypto, we're still here, right? There should be no problem, right? That would be at a bare minimum what you should expect from an exchange. That's in good faith. But unfortunately, there was a lot of speculative ETH transfers here. And while Chris and many people from crypto.com have tried to address these weird transfers from crypto.com to Gate.io, another Asia-based exchange, which I've told people to stay far away from for a long period of time. A lot of these exchanges that propped up fake volume for the last couple of years in crypto, wash trading volume, which, by the way, in traditional markets is illegal. It's important to understand that these are the kind of names that are likely to go bust. It is very likely that these platforms may have more liabilities than they've got in assets. I don't want to make any confirmed statements, but you can tell by the market sentiment here. People are withdrawing en masse, the amount of transactions out of crypto.com's core wallets. Plus, again, after the tweet that Chris put out here, just take a look at the market sentiment, right? If there was real fundamental proof of reserves and trust in that system, you'd start seeing it reflected in the market price, especially after this brutal sell-off. And we're not seeing that. We're seeing CRO token, the native platform protocol token, continuing to set in new daily lows. And Gate Chain is no different here. Down from around around $5 per token, down to $3.50 right now. And I think the other one as well that I'm keeping my eye on here is BitDAO's token, native token for the Bybit protocol or Bybit platform, another leverage trading platform. Gotta tell you guys, there is so much against these exchange tokens right now. I don't mean to bash or be rude to them. I understand everyone out there. Many of these founders are just trying to build businesses at the end of the day in crypto. But some of them did some terrible things over the last year. Some of them did things without user consent, with sometimes money in which was all that those individuals had. And for me, I have a low tolerance for that. I believe that there is no exception for people doing things with your money and not letting you know about it, not making it very clear how you're using your money. Coinbase, from our knowledge, doesn't do that. Binance as well, hopefully doesn't do that. We'll see. We've got to wait. But the contagion is real. And I got to be honest with you all. Even if the storm is over, do you think that that means price just has to go up? If no one's looking to buy crypto for the next year or so, why even go long crypto, right? There's likely going to be more sell-side pressure than buy-side pressure for months to come. And that's going to lead towards either one of two things. Either Bitcoin capitulating further, moving lower, giving you a better price for entry, or B, with all that excessive sell pressure, you're going to have the bid side support. And that means you're going to have months of sideways consolidation. This is how bottoms are formed. I really want to do the best here I can, guys, to keep you guys safe, because nothing is guaranteed here. You cannot just buy the dip. And while I'm going to stay away here from all of the supposed conspiracies around FTX and Sam, and there's so many things popping up here about his connections, this and that. I just want to make a couple things clear, maybe highlight a couple things that I think really emphasize what's really important. First off, Kobe put out this really interesting tweet that Huobi had announced, another, again, Asian-based exchange, had announced that they had 18.1 million in crypto on the FTX platform. 13.2 million of which are customer assets. Now, in the grand scheme of things, pretty small. But Kobe brought up a really good point here that I, again, want to drill home. And I think it's why we are going to have further contagion. FTX was not the only player who did this. A lot of people grew power hungry, and they grew too eager to chase yield. And they unfortunately started to do things with user assets in a very risky way. And he highlights here that why is there any legitimate reason why Huobi would store custodial assets on FTX? I can think of a lot of illegitimate reasons, but I'm struggling to find any good ones. Kobe, yet again, coming with the truth. Gotta say, I love Kobe's takes. Really, when he gets like in his zone and stuff, he's very funny. I've watched the Up Only podcast before, but when Kobe really gets into like his like philosopher mindset, which I think he excels at, he has such good perspectives on the space. And I think this is so true. Like, and he even brought up something as well that I thought about the other day, and I mentioned, which was like, how can an exchange that was making money hands over fist, right? Just user deposits could almost be seen as net profit, right? Because people are going to lose at leverage trading and speculating on the market 99% of the time. Even with that, FTX went belly up and is $10 billion in the hole. This is either one of the biggest, most greedy mistakes we've ever seen in finance per the actual size of the platform, or this is a big money laundering scheme. This is a big, big farce to have much bigger ambitions in the grand scheme of things. I don't want to make any bets yet. There's not enough clear evidence. There's no smoking gun. That's why I'm staying away from the conspiracies. But the case in point is, no matter what's going on, you got to protect yourself. Put your own crypto in your own custodial wallet. Keep it safe. And if you have stable coins, I'll be honest with you all, I would go ahead and properly convert them back to your fiat currency of choice. Don't think it's the time to be in USDT or USDC. Case in point. Another thing as well that I think, again, is another great hypocrisy that has been proven out of all this is how lackluster the SEC has been in responding to any of this. How over the last couple months, we live in a system, and maybe it's not at the fault of the SEC, but of our own government and our regulators as a whole, that we live in a world where Do Kwon is free right now. We live in a world where Kyle Davies and Su Zhu from 3 Arrows Capital, which by the way are trying to save face right now, and if you see them on Twitter, ignore them. And on top of that, now we have many other people like Sam who are likely not going to face any criminal charges. But the White House sanctions, on the other hand, on Tornado Cash, which on average processed about $30 to $40 million of money to anonymize that money on a daily basis. The creator of that, of course, who just created open source code, is now serving time in prison. Are you starting to catch on to it yet? That these people really are so out of touch, and they are playing just as big of a role in destroying this industry by allowing predatory people who excelled in the traditional world of finance to come in and ruin DeFi and crypto. DeFi is not to blame for any of this. DeFi, at least in the core parts and tenets of their protocols, the big ones like Aave, Uniswap, they just allow you to do one simple service: exchange tokens, earn yields. And the great thing is that it's always over collateralized. It always protects the depositor. I haven't heard of people not being able to withdraw from Aave or Compound, or for these protocols to freeze you from withdrawing just because they engaged in speculative practices. Now, see, in the case of DeFi, and this is why I fell in love with DeFi, I think it's still in its infancy, and DeFi is going to, like, the tokens and the value of these protocols, they're going to collapse along with the market for a long period of time. But some of them will rise up and new players will come in as well, similar to the internet, because they never switched the narrative. They never changed the principles. It is all about removing trust and building a system that can work by itself. And while DeFi, I think in hindsight, at least in the current way it exists, is a little bit of a bubble in the sense that it was mainly around borrowing assets, trading tokens, right? It's definitely its infancy, right? We pointed that out many times on the channel. But it's important to understand that as we go through this correction in the altcoin market, as we go through this correction in crypto, and I think we are very much close to coming up towards that breakdown in altcoins as we approach the 200-week here for ETH dominance, Bitcoin dominance, and stablecoin liquidity. Once we get up into this zone, we will have some really exciting buying opportunities, but we are not there yet. There will be the major technology plays of crypto, maybe even another Ethereum that gets really exciting, but it's not here yet, and it isn't going to be here for a long period of time. So why risk your capital after many of you have already faced so many losses in this market? Trust me, we realize that as well. We didn't time the top of this market cycle like we did in 2017. But you know what? We took advantage of the relief rally and we sold the top of the relief rally back in August. We took advantage of that. And sure, we've got a little bit of crypto holdings, but it's something that it could go to zero tomorrow and it wouldn't affect me. It's all about having cash preservation, right? It's all about protecting your capital during the bear markets. And this is the biggest problem that I think so many people doubt. They've been convinced for the last decade from investors who have never traded a bear market, who've never invested, who've never learned from a decade out what can happen. And they just tell you to buy the dip. Just buy the dip. DCA, it's always going to work. Oh, there's certain 4-year cycle theory or certain plausible theories that have worked for the last decade. All those theories, you can toss them out the window. And any models that you use, like the data science models we use, or certain standards that we set here to find potential bottoms, you got to be 10 times harder on yourself and say, yeah, I would expect the worst on that. Like whatever the most worst potential reading could be, expect it, right? I don't mean to be too negative, but I've had a lot of people, like, for example, Solana is a great example of this. For many months, people were saying, Nick, Solana's holding up well against Bitcoin. Should I get in? And I emphasized to them many times, no, Solana, who's building on Solana right now? Who's investing in Solana, right? And now with the SBF news, this just solidifies it here. With the news around FTX, Solana's crushed. And I wouldn't be looking at it until it goes down a whopping 90% from its highs. That's what happened to Ethereum in the last bear market. Why would Solana not face something similar this time around? Not to mention, has nowhere near the fundamental traction of a network like Ethereum, the real developers and real users. This is the kind of stuff that, again, it's easy to lose perspective on, getting caught up looking at the hourly chart or what's going on. But folks, that additional 7% makes all the difference here. So, yeah, I'm sorry to ramble, guys. I hope you enjoyed this video. If you like it, drop a like. But I want to be real with you guys. We've always tried to do that here on the channel. I'm not here to sell you a pipe dream that everything is just sunshine and rainbows and it's going to be better tomorrow. We need to stay vigilant here. We need to keep mind of the macro environment. And one really important thing, there was a really good Twitter profile, Wifey Alpha here, always posts some really interesting stuff in traditional equities that essentially emphasized in this thread about the Fed pivot. And I think that's the last thing we got to talk about here. A lot of people are very excited about, the fact that the CPI was, I think, 0.2% less than expected, basically year over year, right? And the important thing to understand is that the Federal Reserve cannot just pivot. If they do this, which they can, technically speaking, they can always do it. But if they do this, all hell will break loose months later. If the Fed pivots too early and doesn't get a grip on inflation, it will come raging back. And hopefully the Fed knows this. At least that's what Jerome Powell has been emphasizing since August. If they pivot, if they start lowering the growth rate of interest rates or potentially capping interest rates, they will lose every bit of reputation they have. They will lose all the progress they have made, and they will get right back to square one because the Fed needs to get ahead of inflation. It's not there yet. It's almost there. When Jay Powell starts hiking by 100 basis points, you'll know that the Fed realizes they're in the driver's seat and that inflation is likely coming to an end within the preceding months. It's going to be a cold winter. It's going to be a difficult period of time here in crypto and the broader asset markets. But if you can be prepared, be in cash, and save that additional capital for proper dollar cost averaging and buying on the trend reversal, you're going to be much better off for it in the long term. So that's it for today's video. Again, if you guys liked it, drop a like. Thank you all so much for letting me ramble. And if you made it this far, you deserve a gold medal. Leave a comment down below. Drop some thumbs up in the comments if you made it this far. But until the next one, everyone, I'll see you all in the next one. Take care, everyone.